Trading is closed. Let's look at the flows. This is Vector Daily. Today, the market exhibited a risk-on sentiment as indicated by a low VIX at 15.64. However, despite the positive headline numbers, the underlying breadth remains weak and narrow, suggesting potential instability beneath the surface. On the macro front, the S&P 500 index climbed by 0.55%, closing at 6,913.35. Meanwhile, the U.S. 10-year Treasury yield settled at 4.25%, signaling a stable interest rate environment. The U.S. dollar index, DXY, remains firm, but it's the narrow market breadth that raises questions about the sustainability of this rally. With more stocks declining than advancing, the market's foundation appears less robust than the headline index performance suggests. In terms of sector rotation, communication services led the charge, with XLC closing up 1.41%. This leadership highlights a tilt towards growth-oriented plays. On the flip side, real estate, represented by XLRE, struggled, dropping by 0.99%. This divergence indicates a selective risk appetite, with investors favoring sectors offering growth potential over traditional defensive plays. Within the Magnificent Seven, Meta and Tesla stood out with substantial gains of 5.66% and 4.15%, respectively, both supported by elevated relative volumes. This suggests a concentrated buying interest, likely fueled by positive company-specific news or strategic developments. Meanwhile, Microsoft posted a respectable 1.58% increase, reinforcing its position among tech giants. However, the broader performance was mixed, reflecting selective investor enthusiasm within this elite group. Looking at the outliers, Meta emerged as the top gainer, closing at 647.63, a reflection of strong investor sentiment. Conversely, General Electric was the session's notable laggard, declining by 7.38% to close at $295. This sharp drop may be attributed to specific company challenges or negative sector dynamics that weighed heavily on its performance today. As we look ahead, key technical levels for the S&P 500 ETF suggest a pivot at 689.01, with initial resistance at 691.1 and support at 686.89. Given the current narrow breadth, investors should remain cautious of potential reversals. Monitoring sector leadership and macroeconomic indicators will be crucial in navigating this environment. Stay vigilant as market dynamics continue to evolve.